Good day, everyone. Welcome to the live stream. James here, and welcome to everyone that's here already. We'll start in 4 minutes now, actually. So just waiting for everyone to come in. I'd like to start a few minutes earlier just to do a sound check and so on. So let's just check that everything's working okay. Seems to be. Good day, everyone. Welcome to the stream. James here, and welcome to everyone that's here already. How Paolo and Jazz, welcome to you. Greetings from California on Juneteenth, whatever that is. Yeah, all right. Well, a lot of holidays. Hi, Elizabeth. Nice to see you as well. Welcome to the live stream. And Michael Savage. I love saying your name, Michael. I can't help it. Michael Savage. Let's make some trading dollars, says Jazz. And the Jazz. Hello, good day to all. Good day, Tim. Good morning to you. And Tamir. Good day to you. And Walt. Good morning. I'm just going to shoot a note to my private group members to let them know that we're live. Some folks over there don't quite make it. Just give me 1 second. All right. Couple of minutes to go, folks. And welcome to everyone. Lots of folks coming in on this holiday in the US, not the rest of the world. Good day, Steve, M1N1, and Deepak, and Emily Trading. Good day to you too. And XYZ from Poland. Strange names over there in Poland. Folks, if you'd like to press the subscribe button and the like button whilst you're waiting for the next minute or two before we start, that would be greatly appreciated. It's right underneath this video. The one button says like, one says subscribe. Click them both. There's also a button that says join, and if you click that button, you'll be able to be part of this private community here on YouTube for $1 a month. So I'd encourage you to do that too. And the more folks that join, the more often we can do these streams, and the more fun we can have, the more interaction there is. And I'm looking forward to building this community, putting some more effort into it. And it's quite a lot of fun, really. So welcome to all of you that are here already. And we will start in a minute's time. So it's a holiday in the US today, folks. So some things will be moving, some things won't be. A lot of things will just be quiet. But there are a couple of opportunities, and we've already taken one this morning. Actually taken a couple of trades this morning. One is on the pound, the US dollar. We just bought that about an hour ago, and we're already roughly 35 pips up in profit on that trade, long on the pound after the Bank of England declined to change their interest rates and whatever they're saying in the post-interview thereafter. Good day, Manish. Thank you for joining. I really appreciate it, Manish. And I wish that would flash up on the screen. I'm still figuring that out. But well done, and welcome to the membership. I really appreciate it. And welcome to the community. It's wonderful. So well done. All right, folks, it's time to start. So let's get going into it. And as always, as I said already, please press the like and subscribe buttons right below this video before anything else happens. And I'll give you a minute to do that. Whilst you do that, I'll go and have a look at the charts, and I'll swing across to the currency charts. And the reason I'm starting with the currency charts is because the dollar index is one of my favorite plays at the moment. Currencies haven't been great for the last while, as you can see, just looking at this chart, for example, the DXY. Since, about 2 years now, we've been trading in this range on the dollar, trading up to higher ranges and making incrementally new highs, and also incrementally new lows, including the low that we're currently in at the moment. I've also drawn this broadening pattern on the dollar, and you can see the exit point at the lower side, which is the way we're heading at the current moment. We touched the top we're heading down to the bottom. The broadening pattern is these two red lines that I've got angling out here. It's a broadening pattern, expanding pattern, megaphone, call it what you want, all the same sort of thing. It's a reversal pattern, and it does indicate that the dollar might actually break down through the bottom rather than breaking out through the top. We've tried the top on the last occasion, failed. We're heading down towards the bottom. A move down to the bottom will take us down to 93, that order block, the Fibonacci level, I think that's a 78.6% Fibonacci level, and the bottom of the megaphone falling trend line, I suppose, at the bottom. So all pretty neat. Just be careful with neat charts. They often don't work out, and when things look too easy, they probably are. But that's the way the dollar looks. And as a result of that, we're long on the euro and long on the pound, and really just as simple as that. Now, the euro could move up all the way to 1.2. A similar picture on the euro chart will remind you of what's going on the dollar chart and the Dixie chart. Instead of blowing out through the top like we did on the Dixie, the expanding pattern is starting out from the bottom of the range and we're moving up. So we've now blown out through the top, and the target in alignment with the dollar index would be 1.2. That's 500 pips, where my blob and my question mark is. There's also a 78.6% fib over here at about 1.1760, and it's also pretty close to the top 200 period Bollinger Band. So those are two resistance levels, 1750 and then 1.2 on the euro, and we're long looking for both of those, one of those or either of those to occur. We've got long on the pound as well in a similar vein, and really just a pullback. Beautiful, and once again, a little bit too neat maybe, but a pullback down to this horizontal support was resistance, a double top resistance, and then it was support over here, also resistance over there, a little bit over there too. We've dropped back down to that line, the 50 period moving average, this red line, and we've bounced off there after forming an inverse hammer, not quite, almost doji type candle yesterday. So we got long, we're about 35 pips in profit from that long after the Bank of England announced no change to interest rates. They are having their meeting now and their press conference. I don't know what they're busy saying, but we'll find out soon enough. Now, we've also got positions on the Aussie dollar, same sort of thing, long on the Aussie, and I'm waiting for this to move up and move along to the right-hand side here. And by the 1st of July, we'll get to this arrow, which would create a symmetry between these two zones here. The reason I've sort of, a quick way to draw this in actually is just to use the spars pattern and sort of draw it roughly from the left-hand side and then just drag that across to the right-hand side, basically that sort of thing. So that would take us around about to where my green arrow is. Give or take a few days. It might come earlier, it might come later. But any dips down to these horizontal lines are opportunities to buy the Aussie. All these moving averages, there's a 50 and 200 period moving average confluence right here, where the arrow is, my cursor, at 0.6430. My long position is from 0.64. So we're trading at 0.6470 now. So we're 70 pips up on this. And but we may have to just retest these lines first, as we have done. If you look to the left-hand side of this chart, we tested it on 4 occasions actually, the bottom line, before the plunge down and then the rally back up again. So maybe we'll just have to clear out, test a little bit low down into those levels and then move up. Now, we're also short on the euro yen and the pound yen. I'm hedged on the euro yen. We talked about this in the last video. And I still think that these are going to move down. There are all sorts of reasons for this, which we discussed in the private group this morning. One of them being that the Bank of Japan is going to have to increase rates simply because their inflation is incredibly high now. It's over 3%. We have a meeting tonight. The Bank of Japan will be announcing, that's not a meeting, we'll see the inflation numbers coming out of Japan tonight at about 1 or 2 o'clock in the morning my time. I'll be asleep. But we should see then whether inflation is projected to increase again slightly to about 3.2%, which is astronomically high, including not only general inflation, but core inflation too, well above 3%. So that's very, very concerning for a population like the Japanese, who are not used to inflation and not used to price hikes like that. So what's the Bank of Japan going to do, and where are we going on this yen carry trade unwind? At some point, the yen is going to have to see some inflows like we did on the last occasion. That was over here. Look to the left-hand side of this chart. That was the result of the yen carry trade unwinding on the previous occasion. I expected that we'd see it again pretty soon, but we just haven't quite got there, and we're just poking up to the 61.8% fib. We could get higher. We're hedged. I did take another small short position at the 618, so these positions are hedged. We have another small short position. When we get back down to this orange arrow where my hedge level is, I'll exit this hedge, we could take profit on this hedge trade right now if we wanted to, but I still don't know if this is going to move down. So what we can do is when we get back down to the orange arrow is take profit, exit rather, that hedge position, and then leave the original 2 shorts on, plus the short from the top, which by then will be in significant profit. So that's the kind of idea on the euro yen, and the same on the pound yen. And I've still got Harley, the rescue dog, in here with me because my wife's gone out again and left Harley here with me. And Harley, come here. And Harley's missing Carol very much. This is the pound yen. We also went short. This is a new trade a couple of days ago. We went short at the top of the channel line here, looking for this to move down. Once again, I'm allowing for this to move higher. And if we do start moving higher and closing significantly above this level, then I'll just hedge this one like I have done with the euro yen. I do think these are both going to move down, and significantly. And look what happens when the pound gets going. This was a 3,000 pip drop over about 2 or 3 weeks, from 207 all the way down to, maybe it was even more, 180, 179. So just under 3,000 pips. And I expect we should see a similar thing happening again at some point. That would take us down to more reasonable levels for both of these currency pairs, cross pairs. All right, so that's all of that. And so that's currencies. Now going across the US markets are closed today, but the NASDAQ and the S&P are still trading. The single names are no longer trading, or not trading today, because the markets are closed. You can see the NASDAQ and the S&P are both moving down, quite significantly actually. We're short on both of these, and we'll see how we go. I still think, though, however, that we're not out of the woods. The bears are probably looking at maybe a 5 to 10% correction here, and then maybe a continuation of the rally. Do we have this bear market resumption, which I'm hoping for? Harley, no. Excuse me, everyone, folks. Sit down over here. Come on. Okay. Excuse me, folks. Just going to let Harley out. Very unprofessional. James and Harley, the rescue dog, during a live stream. Now, let's have a look at the NASDAQ and see where we're going. Now, as long as we're below the all-time high double top here, I remain negative or bearish on the NASDAQ and the S&P, similar sort of thing. We've been short on these for a couple of days now. We've been moving sideways. In fact, on the S&P, if you look at the current price, we're exactly where we were 1 month ago. We've not moved up, we've not moved down. This price currently, where we're trading right now, is where we were trading exactly 1 month ago on the 19th of May. May. So we've moved nowhere. It is frustrating and it's boring. And this is what markets tend to do. Unless you're a day trader, we were talking about this in the private group, unless you're a day trader, you probably won't want to be, you'll probably fall asleep during this time of the market. We're going into summer. We've got the doldrums coming up. These markets could be pretty quiet. We could see very messy, choppy, rangy markets, especially considering that there's a great deal of uncertainty. There's not a lot of impetus to the upside, as you can see, but there's also not a lot of impetus to the downside. So we're seeing the market stuck in betwixt and between. There are a lot of bulls around, a lot of bears around, a lot of inflows in both directions. We keep on seeing swapping and swapping in terms of the inflows, so and outflows. So that's where we are. We're still short, and I've got nothing to add really to the NASDAQ and the S&P, except that unless or until we break above the all-time highs, I'm going to remain short. Same on the S&P. And you have to remember that we've now triggered a bear market through these big collapses that we saw across the stock indices. Until we make a new all-time high, this is technically still a bear market. Of course, we could still make a new all-time high, peak up through the top, and then decline, and it could still be a bear market. But generally, the line in the sand for me is the top of this range, the double top all-time high. And we're still below there, and we're now moving down after being stuck in this range. I wouldn't say we're moving down even, we're just moving across the side of across the page. So nothing really to add to what we've got going on in there. Excuse me. In terms of single names, we're long on Tesla. That pulled back a bit on Thursday, bounced a bit on Friday, then pulled back late in the day. We're long on ARK-K. This is now going gangbusters. We got long just over there where the green arrow is at about 60. We're now trading at 66.7. So over 10% profit on this. And if you look at this chart on ArcK, you can see there's loads and loads of space above us to get to if we should break up above this recent swing high over here at 67.50. Maybe it's 68. Let's call it 68.20. So that swing high there, and I could draw a horizontal line across there just to remind us, is a pretty important level. And if we should get up and break up above there, we could see this going an awfully long way higher. Now, a lot of this will depend on, of course, what the stock markets are doing and whether they're going to offer any impetus or bullishness for individual names to move up. Names like ArcK, which is a technology name, innovation fund, mostly invested in things like Tesla, crypto names, crypto plays, medical advanced medical stuff, all that sort of thing in that. And as I said yesterday in the live stream or the previous live stream, I'm not 100% sure what's in their basket of holdings right now, 100%, but it's in that ballpark, in that sort of mix of stuff. So I think it's got a chance. And maybe it's now time for ArcK, after falling back about 90%, most investors having lost most of their money on ArcK. Understandably, a lot of people are reticent to get into this. And that might be the reason why it's a good idea to go contrarian on ArcK when so few people are willing to risk what happened on the last occasion. So we're long on that. We're 10% up in profit and basically risk-free on this trade already. And we'll see how we go. Any dips back down to this horizontal channel line, I would consider buying opportunities, but a close beneath there and below the 20-period moving average would put me either hedged or out of the market completely on ArcK. So yeah, so we've got that going, and we've got a long position on NVIDIA too. NVIDIA has formed this beautiful ascending triangle right at the top. I had a lozenge or a blob drawn in here, and I've drawn this ascending triangle. We've actually broken out through the top of it already, although only fractionally, because we've been drifting along in such a tiny, tight range. But I do like the way this looks, and I think NVIDIA has a chance of reaching its recent all-time high, and that's at 153.70. But I think we could get up the top 200 period Bollinger Band, which is up here at about 161.50, and probably through that too. So we're trading from Bollinger to Bollinger. We've revisited the bottom Bollinger, great buying opportunity on video where we got long actually, and we're now approaching the top Bollinger Band. We haven't got there yet. We really just need to burst up through this ascending triangle, break up to that top Bollinger Band, and then see what happens next. So long on NVIDIA, ArcK, Tesla. I'm looking at Google, Meta, a couple of other names on my book, MSTR, not on my book, on my watch list. Right, now going across to Bitcoin and Ethereum, XRP, nothing has changed since our last update. And in fact, these are moved across the page rather than up or down. So there's nothing to add. I'm still long on Bitcoin. I really do want it to hold here though. And I'm going to talk about Bitcoin mainly because I suppose you could call me a Bitcoin maximalist, and anything that happens to Bitcoin or things that happen to Bitcoin are the only things that I'm really particularly interested in. Very often, I'm not really an altcoin guy. I'm a Bitcoin guy. So yeah, I've got a bit of XRP and a bit of XRP and a bit of Ethereum, but I'm a Bitcoin guy mainly. Now, what I want to do is to hold the 50-period moving average right this minute and this horizontal black line that we're resting on top of right now. Notice that we're below the 20, but above the 50. So we're squeezed, sandwiched in between the two of them. I want to see us break up through the top, obviously, but I'm allowing for a dip down to this next level here at 100, the big round number, and the previous support level where we bought on the last occasion. We bounced off there like we did on the previous occasion at 100. So we've got two support levels. We're right at one right now. I'd hope that this one will hold. And then we've got the 100 below us. And anything below 100 starts to become a little bit dodgy for Bitcoin. There is a long-term trend line underneath us right here, which we did dip through on that Liberation Day dip. But I'll ignore that dip for now and just pretend it didn't happen. So there's a trend line over here, the red one, where the 200 and the 100 period moving average confluence is occurring right on top of each other. And that's at 95,800 as we speak today. So could we get down there? We could. I really hope we don't. I hope we don't even have to get to 100. I'm hoping that we'll hold more or less where we are today, probably above 103, 102.80. 102,800, something like that. So we'll see how we go on Bitcoin. I'm pretty, pretty bullish on it, and I've got decent positions on Bitcoin, hoping for that to move up. Bitcoin will lead the way, I think, and Ethereum, we have a long position on there. I think Ethereum looks great. Nice bull flag, pretty technically sound. Once again, a lot of these patterns are all looking a little bit too neat and a bit too consistent, bit too technically correct. Sometimes, and quite often, the markets will make these beautiful technical patterns on the chart, and everyone gets really, really optimistic about the direction that this is pointing in, and then it fakes them out. So when things get too neat, too easy to see, be very, very careful of it. That's what Ethereum looks like a bit to me. So I wouldn't be surprised if we had to get a sudden, sharp clear out all the way down to 2,100 and something, 2,200, this trend line, and maybe even slightly lower. But at the same time, I'm hoping, like Bitcoin, that this bull flag will hold, rectangle really, and that will move up, and the move up should be equivalent to the move from the bottom to the start of the rectangle. That's Ethereum. XRP, same sort of thing. Really just holding in that level right now. I do like the support that we've got. We've got a massive overhead resistance order block, but we're holding the skinnier, tinier green order block just below us. Just because it's skinnier doesn't mean it's less relevant, but we had this big spike down. All of this stuff occurred. Same on Ethereum during Liberation Day, same on Bitcoin, and we've recovered all of that like we have done on the stock markets. Right, so basically long on all three of those. Now going across to gold, silver, and copper. Don't ask me about platinum and palladium. I'm not trading those at all. Generally, I don't trade those very much in general. I just don't like the way they trade, and they're very spiky range sort of markets, platinum, palladium. I'd rather, once again, trade the purer metals, if you want. That's gold, silver, and copper. So we'll go with those, and I'll proclaim myself a gold maximalist. But I'm short on gold right now. This pattern hasn't changed, and as I said in the last live stream, you're probably incredibly tired of seeing the same pattern. But nothing has changed. We reached this high on the 22nd of April. We're now 2 months later. It's almost the 22nd of June. And in 2 months, we've really just moved sideways across the page, but angling upwards, if anything, but we are short. And I still think that gold needs to correct down to $3,000, give or take a little bit above, a little bit below, or even slightly lower down to 2,800. In lieu of that, and of course we'll adjust this if we need to, if we break out through this high, we'll have to hedge and wait for the next top to form, and then do the same process over again. Take profits on the long hedge at some point when we want to change. So if we get hedged, the market moves up, we take profit on the hedge, we add a short, and we allow the market to move down, using the profits from the hedge in order to offset or mitigate the risk on the additional shorts. So it's a pretty standard process and procedure. We'll do the same with gold. But so far, we're holding down below, and 2-3 days ago, we had a big bearish engulfing candle, this one right here, the black one, massive bearish engulfing candle with a tweezer bottom and a tweezer top, quite interestingly. Not quite a tweezer top, but it's certainly a shaven bottom, tweezer bottom, and then we're moving down. Still being held up by the 20-period moving average, the green line here, the 50, and all of the support below us, and trend lines, and all sorts of things. It's not going to be easy for gold to get down. It's not just going to suddenly give up the ghost. Everyone's quite bullish on gold, and there's a lot of central bank buying and that sort of thing. But in order to offset the risk that we've got on the gold trade, we're also long on silver. So we're short on gold, long on silver. This will be the 4th time that we've now done this, and every time we've been short gold, long silver over the last couple of months, we've made profit on both of those trades. And so we're doing the same again. We're long silver, short on gold. Silver, unfortunately, moved up quite sharply and then has now collapsed back down to where we started. So we're back to break even. I'm tempted to just get out of here at break even, but I'm not 100% convinced that this is going to be the case. And because it is a quiet day, it's a US holiday, the markets are thinner, and this could just be thin market moves. And essentially, we've moved up a little bit, but we're still stuck in this range that we've been in for the last week and a half. So we're long on silver, short on gold. We could have taken profit on silver yesterday. It was a full day's move from the bottom to the top, but we didn't do that because we have the short position on gold. So we've got that offset. We're also long on copper, and copper, I still think copper and silver both have really good chances of getting a bit of a move up. Now, copper, if we close above $5 and we, let's just go to a weekly chart here. Maybe a monthly chart, actually. And I've got the, oh, this could work, actually. I want to show you where we are in copper in the longer term picture. This is the monthly copper chart on Oanda, going back to 2004. I'm sure we could go much further back. Some of these brokers don't hold all the data. So generally angling up, and multiple attempts at that top line there, which we haven't managed to achieve yet. 3 spikes up there. But look where the highest monthly close has been, ever, on copper. It's right at $5. That was the month of March 2025. That was the highest monthly close ever, just a couple of months ago. And we had a sharp rejection from there, and we're trying to get back up there again. Let's go to the weekly chart on copper. Still looking good, moving up. And angling up, pretty nice sort of chart there. And then on the daily chart, well, we got long over there where the green arrow is, and we've just come back down to that sort of level. So moving very tightly across the page, but I think copper's got a chance. If we can close above $5 this month, and there are 10 days or so, maybe 8 trading days left. If we can close above $5 this month, that'll be the highest ever close for copper, and we could see a much higher move. So long on copper, long on silver, short on gold. Right, NATGAS. And let's talk about NATGAS. Before we start that, I'll just talk about uranium, URA. We took profit. We're out of URA completely. This is one of the best trades I've had in quite a while. We got long right down here at 22, and we got out, the last bit we got out, we took 25% off there, 25% off there, these 2 orange arrows, and we took the remaining 50% off right at the top here, literally at the top at about 39.15. I think it was 39.15, and we got long at 22 and some change. So we're out of URA, fantastic trade, almost doubling our money on that one. And then UEC, not quite, I'm exaggerating, but getting close to it, 70, 80% growth. But we haven't got out of UEC. We've got 2 tranches on here, one right down from here at $4.60 something. We've got another one up here at $6 something, and we're currently trading at 666, 665. So 2 long positions on there, and I'm looking for that to carry on moving up. And that's just because if we don't get another chance to rebuy URA, at least I've got 1 uranium instrument still on. But I would like to buy URA on a dip back down to this yellow zone. And that could be down to about 33, but it's possible we could get even down further, down to the 200 period moving average and the 50 and the 100, all coalesced around this yellow order block level, and that's at around $29, so just under 30. So any dips into these 2 yellow areas, I'll be looking to rebuy URA. We have no position on that yet, but we do have a position on UEC. Right, natural gas. What I did this morning, and in lieu of what's going on in the Middle East and so on, was to just hedge my entire position. So our average short position on natural gas is 3.83. My private group members will correct me if I'm wrong, out by a cent or 2 maybe, I'm not sure. But 3.83, and we got hedged at, in fact, I can just check it right now, just to make sure. And we hedged just a short while ago at 3.95, I think it was. But let me just quickly check for you. Just opening up my position sheet. I don't want to be inaccurate here. So we got short at 3.83, average position between the 2 short positions that we have on, and fully hedged at 3.98. Right, so back to the chart. Well, we're currently still trading at 3.98. That's where I got hedged. What this looks like on the 4-hour chart is a big bull flag pull, followed by a bull flag, and I expect the next move could be up. Overall, I do think that we're in a pretty bullish sort of pattern. We've talked about this multiple times over the last period, despite the fact that we have a potential long-term head and shoulders pointing down to about 2.5, which is still quite possible to occur, by the way. I'm not saying it's the ultimate play, but if you look at that, it's a head and shoulders. We haven't quite, it's a weak right-hand shoulder, but if we poke up into that red order block and fail there, we could see natural gas not only reaching $3, that's over here, where you can see the cursor. I know you can't see the cursor very well using Stream Labs, and I'm not sure why. It's something I have to fix. But this green block here at $3 is my initial target, and I think we'll be trading between $3 and $4, maybe slightly higher for the next while. But This head and shoulders indicates we could get much lower, down to about 2.5, 2.4, 2.3, 2.6. So I don't like head and shoulders, I keep on saying that, but just keep that in mind. And probably the only head and shoulders that I ignore eventually will be the one that actually works out. And maybe we get down to 2.5, 2.4. But where we are today is just at this level here. That's the daily chart. So overall, just moving up really. And we talked about this breakout. I had all these patterns on the chart showing the lozenge, this lozenge over here where we broke out, we gapped up, we broke out through this ascending triangle top and all these sorts of things. Let's go to the 4-hour chart and have a look at that more closely. So we broke out through that ascending triangle top, flat top breakout, classic sort of move, breakout, touch, 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 all along here. And then the breakout occurred over here. We revisited. I should have hedged over there after having broken out. I did not. I hedged a little bit later on. That's okay. No problem. Still pretty close to where we got in. So that's the way it looks. And it looks pretty bullish to me, folks. I really don't know which way this is going to go. And that's why I've hedged it completely. And I'll wait to see what happens next. But I'm expecting, actually now hoping, now that we've hedged, that we'll move up higher into maybe 4.2, 4.3, maybe even 4.7 where we were before. And then I'll look to exit that hedge, take profit on the long side, and then add some shorts higher up. Same gameplay like we've talked about before on the stream. So we hedge, we take profit on the long side in this case when we think it's going to turn around. We take that profit on the long side of the hedge, and we enter a short using the profit on the long side of the hedge to offset some of the risk of the new short. So we'll do the same on natural gas. We're also short on WTI oil, and I'm not worried about this at all. It's still technically perfectly consistent, although we are trying to push up through that channel top. I can see that. There's quite a lot of force driving up through there. And of course, there's all sorts of stuff going on in the Middle East that is putting pressure on the price of oil, upwards pressure. But we've seen it many times before. We've seen it in the Middle East. We've seen it in Russia and Ukraine. We've seen it with OPEC. We've seen all of these things that tend to drive the price of oil up on occasion. And when it does, the normal reaction is for it just to sell off straight away. Now, let's have a look at what happened every time we reached the top of the channel. On that occasion, just sold off straight away. A little bit of bouncing around there, a bit spiky, but just selling off. The next occasion, pretty much just a direct sell-off, little reversal candle, took some time, a number of days, about a week, and then moving down. And then on this occasion, when we reached the 200 period moving average, dramatic sell-off. And now, the next occasion, when we reached that channel top, dramatic sell-off with a, well, fairly consistent and dramatic sell-off straight from the top. On this occasion, let's go to where we are now, not the same thing. This is reflecting what's going on in the Middle East and the confusion, the chaos, the saber rattling, the threats about nuclear and conventional energy sources in Iran, and so on and so on. And you can see that we're seeing a lot of thrashing around and actually quite firmly pushing up through there. I'd like to see this shoved down today, if possible. We don't want to see this moving up through this level, really. And I'd like to see a fairly sharp turnaround like we've seen on all the other occasions. If you look at what happens at the bottom of the channel, we've only reached it really twice now. Let's see what sort of reaction we get. And there we go, fast approach, strong approach to the bottom of the channel, and then just a little daily reversal candle. And then quite some time, consolidation, accumulation before the move up. And then on this occasion, with this double bottom, there's a number of occasions there at the bottom of the channel, but I'm looking at this occasion, once again, big, strong reactions straight up from the bottom, bouncing off the bottom. We're not seeing that right now at the top here. We did see an initial sharp rejection from there. Obviously, a lot of selling at this channel top. Massive move down. We touched it at 74.5. We moved immediately down the next day to 67.8. So a huge rejection from there. Those orders, that thinking, that mindset has not left us. It's still there. All of those orders, all of those shorts, all of those people who are eyeing that channel top haven't left the room. They're still looking at it, as we are too. And we'll have to see how today closes. Today has not closed. We're still below the channel top. We're still below the spike up into that channel top a few days ago with the onset of the attacks on Iran and so on and so on. So far, we're okay. Now, the question is, are we going to hedge this? I'm not too sure about this, and I'll have to decide. I don't have a massive position on here, and I'll tell you what position size I've got on WTI. Well, it's a fair size position actually. It's not complete, it's not full, but it is 80%. Now for me that's 80% of my unleveraged position. So it's not leveraged and it's not full. I mean, I could still add leverage. I generally try not to, but that's where we are. We have an 80% position. I'd normally be at about 50%, so it is slightly bigger than normal, but it's not leveraged and it's not a full position. So there's plenty of room to add to this. But I do realize that some of the folks that are following me and trading have smaller accounts or might be leveraged or hold bigger positions or have taken on more risk or got into the short trade lower down or something like that and are struggling with this trade currently. My best advice to you is if you're feeling uncomfortable with your position size at this level, you should either hedge it, reduce your position size, take a loss if you have to, and do whatever you have to do to get into a situation or a position where you feel comfortable if this market should move against you and you have to take a stop loss or you have to hedge it or whatever. There's a weird noise coming up through there. So make sure you get into a position where you feel comfortable and consider that this could break out dramatically through the top if something really goes awry in the Middle East. Not to say that it hasn't already, because it is already, but if it gets even worse, this could go up to $100. You need to be prepared to hedge that, take a loss, switch direction, whatever you need to do, but you need to be in a position where you're able to do that and not hold on to your current position riddled with fear and desperation and confusion about what to do next. If you're feeling like that right now and you're short on oil from much lower down, or you have a larger position than you can afford to hold, do something about it right now. This has every danger of breaking out through the top just as much as it has breaking down and rejecting from here and moving down. I still favor the rejection here, even though we're shoving right up against that line as we speak. It looks pretty determined. But if you go to a 5-minute chart, you can see we're trying to reject there again. I don't trade off 5-minute charts, so I didn't know what I'd see when I turned this to a 5-minute chart. But we are trying. If we look at a 15-minute chart, and these are charts that I don't look at myself, we are trying. There's a bearish engulfing candle on the 15-minute chart. If we go to the 1-hour chart, just trying a little bit there as well. So all of these charts indicating that WTI might try and form a top here, but we don't know. And this has every danger of breaking out through the top. My general feeling, however, is that oil will trade between roughly $65 and $50 going forward into the foreseeable future, and that we've got to get back down into that range, and we're currently way too high in price. So that's it really on Brent crude oil, and I think we've covered everything. We've talked about natural gas, talked about oil, we've talked about stocks, talked about currencies and the yen carry trade unwinding, we talked about the pound yen and the euro yen, the shorts that we've got on, the Aussie, the pound, and the euro longs against the dollar that we've got on. Stocks, well, individual names aren't trading, but the markets are moving down slightly. And we've talked about Bitcoin, Ethereum, and XRP, and we're long on all three of those. Short on gold, long on silver, long on copper. We've talked about energies. And then quickly, just going across to this chart, the dollar rand, let's just quickly, I don't think we'll be trading on TLT today, but let's have a look at the dollar rand. VIX, we don't have any positions. We're long on TLT. But that's so boring, it's not worth talking about. This is an interesting chart. This is the rand. This moved down. All these black candles here over the last two months or so indicate rand strength against the US dollar. And the rand has been strengthening against various currencies, including the dollar. And I think one of the primary reasons is because of the price increase in gold, platinum, palladium, and various other metals that you can pull out of the ground here in South Africa. But it doesn't explain why the rand has gone from 20 to 18, a 10% improvement in the price of the rand against the dollar. And I don't understand it. And I think there are forces at play that we don't understand that I'm not privy to, so I can't even comment on it. But what I do see here is an incredibly similar pattern to this previous fractal in green, and we should see a short squeeze all the way back up to about 20, and that's what I'm expecting. We're long on the dollar South African rand. And then going across here, yeah, I put these up on X this morning, so there's not much to really cover apart from what I posted up in there. You can go and have a look at that. Cocoa, I just said we're a bit late on this. We're still short on cocoa. It's moved down to that support level. I'm looking for this to move down further, down to that pink zone, bounce off there a little bit, and then carry on down into more sensible levels. but I put these charts up on X this morning. Go and check that out. I put this exact chart up on there. You can go and check that out and copy it if you want to. Maybe you might not enjoy doing that at all. Now, here's coffee, and we've now broken down into the channel, as I was hoping we would. We didn't get reloaded there. We have half of our position on now on coffee, and I wanted to resell at the red line. I didn't get the chance. Although we got close, I missed out on that on 2 occasions, had 2 chances, but we didn't touch the red line, so I didn't get into the trade. We've now broken down, holding that 50% short. I'll be looking to exit some of that at this channel line, the center line of the channel, and then resell. Maybe I'm going to bounce back up to the top of the channel, and then looking for this to move down, eventually through the bottom of the channel and down to about 240, 250. So far, extremely good on this. We've played this one really well. All of our shorts have worked out, and the current short, even though it's not a full-size position, which I'd hoped it would be by now, because we missed out on that little rally, it's still a good position. So that's cocoa and coffee. And then we're still long on sugar. Sugar trying to bounce off the channel line bottom, descending, falling wedge. And I still think this has got a really good chance of bouncing off here and moving higher. We're still long on that one. 2 small tranches. Well, we've taken some profit on sugar already at the highs there previously. And that's all, folks. We've got nothing on soya. Wheat. Wheat. We talked about this. Did I talk about wheat? Yeah. So this is, I can't remember if I just covered wheat or not, but let me do it again. Wheat has now broken out through the channel. It's a very long-term channel going all the way back to 2022. It's now 2025. Eventually, and finally, we've now broken out. So I need to switch and my target's right up here at about 750 at these levels here. See, towards the middle of your chart. I'll actually put a horizontal line in there right now for you. Somewhere up around here, something like that, where the black line is. That's the target. And if you're not in this trade, and a few people have asked me already, what is the best thing to do? So we're long from right down here at about 540. We're currently trading at 590, so a long way below. But there's still a chance if you want to get in, and I drew this green line here just to help you out. If we get a move, and it's not open today, this market's closed, but tomorrow, or early next week, if we get a pullback down to the channel top at about 575, or even slightly below that, down to about 570, maybe even slightly below that, down to about 560, but anywhere in that region near the channel would be a good place to enter this trade. It may take a few days to dribble down, faff around, and eventually find some legs and bounce back up again. So there's no rush on that one, and I think you'll have plenty of chance to get in at a later stage. And that's it, I think. I think we've covered just about everything. Now I'll go through some of the questions and greet everyone. So thank you for attending, everyone. I really appreciate it. 85 people here on a public holiday. That's really good. So well done to all of you. And I've greeted quite a lot of you already at the beginning of the stream. And I'll start with XYZ from Poland. I'll welcome you again. Naruto Umkazi, Uzumaki. That's not, it's Uzumaki. Hello, nice to see you. Manish, well done for joining. Thank you for joining the community here on YouTube. If you haven't joined, folks, there's a button below that says join. For $1 a month, you can be part of this YouTube community and get a whole bunch of benefits for $1 a month. There you go. Michael Savage says join up for $1. All right. And we hold live member streams, members only. I'm going to hold one tomorrow. So if you'd like to be part of a live stream where it's not open to the public, it's just open to this community, and you want to ask your own questions and be in a slightly safer space, I suppose, where there are no trolls and no weirdos and no freakoids, hopefully that'll be the place for you to go. So there's a join button below. Click that for $1 a month, and then tomorrow you can join us all in the members only live stream and ask your questions and have a look at some of the important things and interesting things which I don't always cover in the public streams or just don't have time to. Paolo, how to join the private trading group. There's a link below this video that says Arcis Trading. You'll see it in the description. And in there, on that page, you'll see a link to the private trading group. And there's a 30% discount on currently. So anyone that joins up today can get 30% off any of my trading courses. I have one on natural gas trading. It's called the Widowmaker course. And I have one on Swing Trading Blueprint, which is my entire trading system, philosophy, and process from A to Z. That's available for sale, all at 30% discount. And there's also the private group, also at 30% discount. So just go there and sign up just below the video in the description. So I'd love to see more of you in there, of course. Good day, Martin Wolfbauer. Lovely to have you, one of my favorite and greatest fans. Light Chaser. I'm long on German 40, TP at 23,325. Yeah, so Light Guard, we were short on German 30. I'm not trading it currently at the moment. I don't have that up on my charts, as you will see. So I'm focusing on the US equities at the moment, and I don't have any German 30 trades on or anything looking at that. But let me quickly put that chart up for you. German 30, German 40, same thing. And I'm going to put my Black Bull chart up here, the one that we've been trading. And you can see where we were trading on this. And this is a pretty simple sort of trade. We got in at the top of the channel here. Let me just zoom out. Very, very simple. We got in at the top of the channel. We sold it on the previous occasion at the top of the channel, and we got short there. And we now sold at the top of the channel again, and we got short there. We took profit down here at the green arrow at the horizontal support level, and we're currently right there at the moment. There's the 50-period moving average that we're touching. There's the horizontal support on the left-hand side of your chart, and it's also a 50% retracement level. So it's a pretty good and interesting support level, and I would encourage a purchase here, a buy, a long. I'm not going to take it myself, but I might actually. Probably not today, but we could have a look at this tomorrow or Monday and see whether this gives an opportunity. I'm going to wait for a daily reversal candle at this point on the German 30 and consider buying that. Remember, we're also short on the NASDAQ and the S&P, so this would be in a contrarian view to what the US equities are doing. But I do like that idea, and thank you for pointing that out, and it's given me a good thought, really, something that I hadn't really thought about for a couple of days, because we were short and I wasn't thinking about going long. So I appreciate that. Good idea. Good afternoon from a hot London. I believe it's very hot there, Blue Jail. My folks are saying it's sweltering in Farnham. Rowledge, actually, not Farnham. Rowledge is pretty close to Farnham. Somnath, I'm going to read your question out. Hello, James. I'm out of natural gas now. I'm only scalping inside a short range when the market is less volatile, but I would love to have a short position from the top. But I'm confused as to what would be the actual top. Well, we're all a bit confused, Somnath. We don't know where the top will be. It might be where we are right now. I don't know on natural gas. But it does look like it's trying to move higher. Like we've got this bull flag, potential bull flag, and we've broken out all of those levels and so on and so on. So all eyes are looking bullish, and probably, actually, and if for those of you who are looking at that head and shoulders pattern, and it's this one here, the right-hand shoulder up into this order block at about 4.3, that could be the play. That might be the area to look to sell into. And if that was to form a head and shoulders pattern, and this is, I'm just throwing a wild thought out here, the target for that, just keep that in mind, is all the way down here at about 2.5. So, but I think all indications are rather that we should head up slightly higher first. But I don't know. We might just turn around here, in which case we'll have to unhedge our hedge and go back short again. I'd rather this moves up now, of course, because we're hedged. And I'd like to take some profit on the long trade, on the long side of the hedge, and not lose money on the long side of the hedge if this moves down straight away from where we are currently. Market falling and recovering, same as fast. Yeah, Rakesh. Is coin in ARC? It might be, Jazz. It has been in the past. I don't know if it is currently. They change their holdings from time to time, but it could be. Coin had a good run yesterday, 3.83. Thanks, Tanil. Javier says, James, what platform are you trading? So, Javier, I use Black Bull Markets. The link's below as well if you want to sign up with them. They're a New Zealand broker, an ECN broker. I've been trading with them for a long time, and I'm also an affiliate of theirs. So, and I wouldn't be unless I traded with them myself, and I wouldn't recommend any broker to anyone unless I have extensive experience myself. So I use Black Bull, have done for a long time. I also use Pepperstone. I use Pepperstone for CFDs on futures, which are not available on Black Bull. Obscure futures like, I don't know, orange juice or whatever. And then also I trade natural gas continuous at Pepperstone when I don't want to be in the futures in the week before the futures roll over or a couple of days after the futures roll over. I'd rather trade the continuous price at Pepperstone, which is a broker also regulated in the UK and I think the US as well. So those are my two main brokers, but I've traded with Oanda for a long time, got an account at Oanda too. Cocoa, we've talked about Himanshu. I think we talked about cocoa. Yeah, we talked about cocoa. Yeah. Roby, 8% of ARC is in coin. Thank you, Roby. I appreciate that. Yeah, so there's a good reply. ARC K is holding coin to the size of 8% of its long positions, I'm assuming, or its positions. Its only positions. Keep it up, James. Thanks, Drew. Thank you very much. I'm also short on gold, but seem to be in the minority in the Trading 212 Gold Social Forum. But lots of bulls in there. Yeah, so Drew, just have a look at the COT report. I did a video on this 2 days ago. We looked at the COT report on gold. COT report's not indicating that we should be incredibly bullish right now. In fact, it might be indicating that we're near a top. And there are some variances and discrepancies in the COT report and divergences between various, each of those 6 or 7 various groups. And there seems to be some confusion as to which way gold's going next. In my experience, gold will probably correct. It may have to reach a fractionally new high later on. Before that, I don't think so, though. My experience that this should head down. But I don't know. I mean, obviously I'm not 100% sure because I'm not all that convinced because I'm also long on silver at the same time. These two generally move together. So the fact that I'm short on gold, long on silver, despite the fact that it's worked out profitably for us 4 times already, also indicates that I'm not 100% sure that gold is going to go down or silver is going to go up. So it's a nice way to hedge these two because just in this instance, for example, and it could be another way around at another time, but in this instance, we've been able to go short on gold and long on silver and be profitable on both. On other occasions, it might be possible to go long on gold but short on silver and be profitable on both, or yet again, long or short on both of them simultaneously is the norm. So yeah, I don't know which way it's going to go. I'm happy with the current position. And I'm also happy that overnight swaps on gold are always positive. And so when you're holding gold short positions, if you've got a decent broker, they should be paying you money out every month, every night, like my broker does at Black Bull. So I get a few dollars for every position that I've got on my short golds, and that just goes straight into my trading account. So it's better than holding a short dollar-yen position, put it that way, where you have to pay up every single night, a huge amount. Yeah, thanks, Drew. So your comment is you always thoroughly enjoy my analysis. Thanks, mate. I appreciate that very much. Luca, what's your thoughts on cotton? Yeah, so let's have a look at cotton quickly, Luca. I'm going to finish off in about 10 minutes, but let's go through cotton. Yeah, so cotton, it's actually one of my favorite plays, this. We've definitely formed a bottom here, or tried. I'd be very, very surprised if this is not a big double bottom. Also, the way it traded within this channel, thrashing from top to bottom with dramatic effect and very rapidly, and then breaking out in an incredibly untidy and messy way, and holding above that trend line, moving down a little bit now, sure. But we've got long positions. There's our cluster of longs that we haven't added or taken any positions off since then. So yeah, we've got a couple of positions in profit. Actually, that one's now just gone out of profit. But so 3 out of profit, 1 in profit. But I do like the way this is looking. And I think cotton could reach all the way up to one of these 2 lines, the red one or the green one above that. And I'll be looking forward to that soon. So yeah, big double bottom, spike lows, anything above there I think is a long on cotton. And if we do get back down there again, maybe back down to the trend line top one more time, maybe, because we haven't really actually revisited that trend line. So maybe we just need to get back down to the top of that trend line, and there at that point I'll be buying cotton again to add to that current position at roughly that same price. If we do bounce off this trend line top, even though we've moved down from where we broke out of the trend line through the top above it, even though if we move down to touch it from the top at a much lower price, it still means that we could still be bullish on cotton, particularly with that double bottom spike low, and I don't think that's going to be easily overcome. So yeah, definitely bullish on cotton. But it's been boring and lengthy and drawn out. And then MD, you want to look at NVIDIA. Well, NVIDIA's not moving today, mate. So, and we looked at it earlier. I've already talked about NVIDIA. So I don't think I want to carry on talking about it anymore. because nothing's going to happen until tomorrow. But we've got an ascending triangle breakout, and I think we could get back up to the all-time high double top, and then up to the top Bollinger Band, the top 200 period Bollinger Band at 161.50, and then probably beyond that. We've got some Fibonacci extension levels above us, and we've got this one at 188, 189, let's call it 190. That's the 1.618 fib. I think we could easily get there at 190 on NVIDIA. So that's kind of my sort of next target after the top 200 period Bollinger Band at 160. So 160 and then 190 for NVIDIA. That's the sort of general idea. And, you know, my general ideas have a 70% chance of working out, a 30% chance on average over tens and tens of thousands of trades. My average 71% winners, 71. That means 30% of the time I'm going to be wrong. And that's quite a lot. So even the best traders have to deal with a 30% losing rate. And that's a good trader. A very good trader should expect to win 55 to 65% of the trades. An exceptional trader, 70 plus, I would say. I'm not calling myself an exceptional trader. I've just been doing it a long time. And if that makes you exceptional, I suppose I am. But it's just experience, really, I think. Not particularly intelligence or any special gift or any special superpower that no one else has. It's just a matter of doing it over and over and over again and keeping at it and being consistent. But yeah, so I drifted off again. Do I think sugar is close to support? Yeah. Yeah, so that's NVIDIA, MD, and I think we could get a lot higher. Abdullah, your question is, do I think that sideways movement on the 4-hour for natural gas is indicating a short, or do you think it's simply due to low volume of the holiday? Well, it is low volume, not that low. I mean, natural gas is a worldwide commodity, it trades everywhere all the time. And just because the US is celebrating Juneteenth doesn't mean anyone else is not trading it, and it doesn't mean that the rest of the world isn't busy furiously making deals, filling up inventories, supplying oil and energy companies, making, you know, transport, arranging shipping. It's going on all day, every day, all the time. So yeah, maybe a drop in volume, but this does just looks like a bull flag, really. Big bullish candle on the 4-hour, sideways. Next movement would normally be up, and so we're hedged. If this moves down, I'll have to unhedge and take a loss on the hedge position and add some shorts. If this moves up, it would be better for me because I'll take profit on the long hedge higher up, add some shorts using that profit on the long hedge to mitigate the risk on the shorts and ride it back down again. Remember, natural gas is a ranged instrument, and we're looking for the top of the new range. I think the top's around about $4. It could be closer to $5. I don't know. I'm not 100% sure. But I think it's more likely to be higher than lower, and we're no longer in that $2 to $2.50 range, and then we got into the $2 to $3 range. And I think we're now in the $3 to $4 range. It could be $3.50 to $4.50. I don't know. Excuse me. That was a horrible sounding cough. But for now, we're moving up. And you can see quite clearly it's a bull flag. And we're not moving down. We haven't corrected. We've held up there. Looks like accumulation, not distribution. I'm learning to use all the words that the new trader ilk are using. Things like order block, accumulation, fair value gap, all the Elliott wave technology or terminology that I'm revisiting as a studied Elliottian in my past, and other such terms that have popped up in recent times that we never used to use, and we don't use words like cable or the single currency anymore to refer to the pound or the euro. Things have changed, and we no longer trade using hand-drawn charts, which I started off with, by the way, hand-drawn charts. Don't think any of you can possibly imagine, unless you're my age, what it's like to draw hand-drawn charts and try and trade off them. That's where it was 30 years ago. Okay, folks, that's all for now. And have a great trading day. For those in the US, happy Juneteenth, and enjoy your day. Take the day off if you're not trading, or if you're doing something with your family and friends. Go and relax. Get away from the markets. Turn off the computers. Turn off social media. Go down to the lake. Have a barbecue. Have a picnic. Do something fun. We'll see you in the next video. Take care. Oh, by the way, folks, I'm going to try and give some memberships away. I think I might have exhausted that. 1 second. No, can't do it. So if there are no other questions, folks, we're going to finish off the stream, and then I'll see you in the next live stream, which will be tomorrow for members only. So if you're not a member,